as regards China, it's pretty clear that President Xi Jinping has further strengthened his power in the Communist Party Congress last October. I think one of the big questions is what he intends to do with all this power. Some people say it's power for the sake of his own authority. Others say that he's accumulating more power to really make a big push for reforms. But I think structurally that these kind of big reforms are unlikely to be particularly rapid. I think his main priority is political and social stability. So we will see some moderate reforms in terms of state-owned enterprises, finding new measures to cool the property market, cut overcapacity in heavy industries like coal and steel. And I think we'll also see a more activist China internationally. But the reforms economically will probably be much less rapid than we saw in the sort of late 1990s. On the subject of China and US relations, I think if we do see a much more protectionist attitude by the US, then this could certainly spill over into the geopolitical dynamic. Foremost in our minds is the North Korean situation. It's pretty clear that the US needs China's diplomatic and political support to increase pressure on North Korea. China has made some big moves in this regard. If the US and China were to have a more adversarial relationship, then I think some of this cooperation could end. We could see issues like Taiwan and the South China Sea come back to the forefront. So I think a lot rides on this relationship. Just staying on the theme of protectionism in China, it's true that we are seeing rising protectionism, but it's also true that we are seeing moves elsewhere in the international trade landscape, which is boosting trade. So for example, China's Belt and Road Vision, which is a multi-decade plan. We've seen increased efforts at trade integration in the ASEAN states. Also, the EU and Japan have signed a free trade agreement, other things going on in Latin America. So it's not all negative.
Just on the China risk and why everyone seems to have forgotten about it, I think there are two drivers behind that. You know, once again, China proved that when everybody thought they'd lost control, that they didn't have the levers to stabilise growth. Once again, they pulled all the levers. Growth picked up. You know, how many times can you keep calling this financial crisis that's going to happen tomorrow and it doesn't happen? So people have kind of given up on that a bit. But I think there's also been a view has started to emerge from a lot of the commentary that it looks as if somehow China is managing to deleverage in a very benign fashion. So they're controlling the growth of corporate credit without GDP growth falling. I have to say I'm quite sceptical about that conclusion. One reason being, if you look at China's nominal GDP growth last year, it's probably around 11-12%, right? The GDP deflator inflation is running 4.5 to 5%. That is not a sustainable rate that the Chinese will be happy with. So we've got to plug in more like 2 or 3% for a long-term sustainable inflation rate in China. We published some research last week suggesting that the long-term sustainable real growth rate of China is about 5.5%. So you're looking at a normal nominal growth rate in China of 8%. You know, once this cyclical reflation, which has been very aggressive, very, very aggressive when you look at nominal GDP, once that normalizes, that's the sort of rate of growth that the economy can reasonably expand at. Corporate and aggregate private sector debt growth in China is still 13-14%. So there's still a massive gap. We're still increasing the leverage of the real economy in China. So we've been trying to go through an exercise thinking about how much does investment growth in China have to slow down in order to reduce the level of corporate borrowing such that the level of corporate debt starts growing, converges on a number like 8%. And when you do that arithmetic, it's pretty ugly. We're talking about a 1.5% growth shock to GDP growth, a 3% shock to investment growth, just to bring that number down to, well, it ends up being less than 8% because you have to then factor in lower investment affecting GDP. So when you iterate, that's where you come out. So the idea that China has got through this leverage problem and is dealing with it, I am quite skeptical about that. So, the possibility of that concern re-emerging only takes 3 or 4 weeks of bad news out of China for the market to get very, very panicky again. So I wouldn't put too much faith in this problem having gone away completely.